Hey everyone, Jay with Code 3 Assets. Want to make a quick video to explain what Code 3 means and what we have going. So let me share my screen here. Code 3 Assets, you can see our mission statement at the bottom there. Essentially what Code 3 means is emergency services. A number of you know, or most of you probably know, I got a pretty extensive background in that. Code 3 is simply an emergent or exigent response to something that's rapidly unfolding. So that's where the name comes from. So what is Code 3 Assets? There's a number of things going on that have been going on locally where we're at, and really much bigger than that nationally and globally that we believe requires some Code 3 responses in people's portfolio planning, retirement planning, and so forth. So if you're not in Wyoming, just hang tight a second. We'll be right back to what's applying to everybody. But that's where it started a few years ago. Our company models are heavily vested in Wyoming, and there are a number of threats and uncertainties about the Wyoming economy. And if you live there, you know what I'm talking about. So a few years ago, we realized that we needed to develop income streams outside of Wyoming in things that made sense, in places that made sense. So we wanted to insulate ourselves from what we seen coming, and that's essentially what we set out to do. Is we began that journey. We realized we could help a lot more people, and we expanded our horizons from there. But it originally started with a need relative to the Wyoming economy and what's happening there. But you know, if you look at it from a bigger perspective, global markets or certainly national markets, there's historic levels of disruption by central planners. Central planners, I mean politicians, central bankers, anything on there. It doesn't matter which side of the political spectrum we're on. They're all spending money in unfathomable amounts. And I could throw up, we can throw up a number of charts here just to scare everyone. But I was just trying to kind of illustrate a point. And, unless everybody's talking about the record stock market, but yeah, we look at this was at the New Orleans Investment Conference here in the center. We look at the amount of money losing tech companies and their record valuations. Over on the right shows the Federal Reserve's balance sheet. If you don't understand what that has to do with anything, don't worry about it. I'll talk to you about how you can join our community for free. And these are conversations we will have, and we'll break it down in ways that's really bite-sized pieces and easier to understand, and plug people into networks to help us do that. So, but ultimately, everybody understands we're in an inflationary environment right now. I'm sure everybody's feeling the squeeze on that. Groceries certainly cost more, vehicles cost more, everything costs more right now. I mean, it's nuts in a lot of ways. And if you're locked into a wage or some sort of fixed income and the costs are rising around you, your purchasing power in the real economy is declining. And when you can purchase, or excuse me, when you're unable to purchase as many goods or services in the real economy, by definition of your quality of life is going down. So that's what we're trying to plug people into, information to understand that, and strategies to try to mitigate those risks and perhaps even capitalize on some opportunity. But certainly a number of crazy things going on. With a lot of talk in taxes, I think it's simple. It doesn't matter where you fall on the political spectrum. Just ask yourself, is it more or less likely that taxes will be higher or lower in the future at my retirement age? Ever. You're planning on something happening, is taxes more or less likely to be present next year or this year? Well, obviously that's probably going to depend for a number of people based on where they're at on the income scale. But certainly what we try to do is we try to find investment opportunities and plug people into opportunities that are tax advantaged. Because instead of viewing taxes negatively, that's what I used to do, become kind of almost angry about it, is we found ways to think positively. And Tom Wheelwright, who's just an outstanding human being, awesome tax expert, taught us if you understand the tax law as a series of incentives for the government to get people to do what they want done. Well, if you start thinking of it that way, the tax law becomes a roadmap to faster wealth building. Because there's a very limited part of the tax law that tells you how much tax you owe. The rest tells you how to not pay tax. So we build teams of people and strategies and plug into opportunities to do things that the government wants done. And then we essentially partner with them. Think about it this way. If you have $100,000 in tax, or correction, if you have $100,000 in income, say, maybe a passive income or something, and you have a 40% tax rate, you owe $40,000. And your net gain that you get to take home for purchasing power in the real economy is $60,000. But if you view the government as a partner and you use something like bonus depreciation through an investment opportunity, now the government essentially gives you that $40,000 back. So they're essentially making that investment on your behalf. And now you got a cash flowing asset on your balance sheet. And now you're back to that 100. So it increases our velocity of wealth. Our wealth building gives us more purchasing power in the real economy. Obviously, taxes are one of everyone's biggest expenses. So essentially, simply put, it's a way to cut expenses and accelerate our wealth building. We try to find opportunities like that and build up networks of people that can help us do that. George Gammon would say, if anybody follows him, there are no certainties, only probabilities, but certainly appears from our seat that things are more likely to be rougher waters going forward than not. So certainly if you're in Wyoming, we may have some short-term boosts right now with a number of things driving the coal market a little bit, but that's going to be short-lived. And you know, that there is going to be some economic problems there, and all the central planners in Wyoming, politicians, local or state, they can't decide what to do about it because they don't know what to do about it. So that's why we're not putting all of our families' livelihoods in their hands. Nothing wrong with those folks. They're trying to deal with a pretty big problem there, and we don't want to have single point failures on our side of the fence. So it seems like at the macro level, the national level, there's always a crisis that needs some kind of spending. Something's always going on, it seems, over history here that has to be funded at very large deficits. And I would say that's probably more likely than not to continue into the future. So it's beneficial to folks if they can start to understand that and plug into opportunities to hedge those risks and maybe benefit from them. Throw this up, just kind of quick illustration of kind of what I'm talking about. You look on the bottom there, kind of the center, right of center, they had a federal deficit. So we started running a deficit there according to that chart, 2002, and it's never stopped. Look at the size of the deficits now. Don't worry if you don't understand. Basically, that we're spending more money than we're collecting. So, you know, without getting too far into the weeds on that, it's really interesting that I think, you know, it is, I didn't even used to know what modern monetary theory was, but when you learn of that, you know, I think, wow, not too many years ago, that would have been laughable. Well, now there's central planners and politicians that truly believe that as long as you're a sovereign nation, you can print however much money you want to pay for whatever you need. So you can default, you know, you can't not pay your obligations, you just create more money. Well, I guess, yeah, they can do that, but you have to talk about the cause and effect relationship of that. So that's some of the stuff we get into, and we try to find investments that hedge those risks and benefit from those actions. Hopefully it never goes that way, but certainly the deficit spending is happening and inflation is happening, and who knows where that modern monetary theory might go, but crazy. If you look at the dollar's purchasing power on the left over about 100, I guess almost 110 years, it pretty well one direction, down. And if you look at how it looks at the end there for the last, what would that be, 30 years, it's almost flatline. I mean, if we're talking a medical scenario, I think we would all recognize that's a problem. And I'm not saying the dollar is going to go away or anything like that, but certainly its power, its purchasing power has declined. So, I mean, it's as simple as, you know, 20 years ago, $100,000 went a whole lot further than it does today. Not all doom and gloom. There's opportunities. The flip side of every problem is an opportunity, as Russell Gray and Robert Helms would tell us. So you just got to know where to look and how to assemble the resources. That's what we set out to do. That's essentially the mission of Code 3 Assets. There's some social component of all of this as well, but we won't get into the weeds on that today. But we set out to develop strategic relationships, build opportunities, surround ourselves with people that are pursuing common goals, that can help us decode a number of these risks, understand them for ourselves, and we can bring that out to folks around us to benefit folks in Wyoming and everywhere else. So that's kind of what we're doing and why we're doing it. Jim Rohn, you're the average of the 5 people you spend the most time with. So understanding that principle, if anyone's followed us on social media or tied into us, you know that we've been traveling a lot, just a tremendous amount, getting in the right rooms, always pushing to get in bigger rooms around bigger people, creating strategic alliances so that we can move this opportunity for a lot of people forward. So that's kind of what we've been doing. It's kind of an illustration of that. I'm not putting any of this up here to brag or anything like that, but there's some really smart people on this page, and we had to obviously go to where they are. I mean, we got everything on here from mentors to obviously friends, tremendously successful real estate investors, syndicators, oil, coal, or not coal, definitely not coal, oil, gold, real estate developers. I mean, educators. I mean, you name it, they're on here. So pretty proud of the networks we've built, and we want to plug people into those opportunities. So how can you do that? You can join our community for free. I know it's free. What, we got to run to the back of the room and buy something. It's not one of those things. It's free. If you want to join our newsletter and you want to get plugged into the information flow and tie into what we're doing, so that maybe you can see what fits your needs, and if you need to adjust your strategies in your life as we kind of migrate this river of economic chaos, just join our newsletter. We'll send you'll get on our mailing list. We'll send out various newsletters, maybe various updates, clues in the news, whatever it is. We may have some Zoom meetups where maybe we bring in guests in our network to explain certain topics, maybe service providers, whatever the case may be. It'll be very broad, not just macroeconomics, down to the tactical level of what you can do. And then it's up to you if you want to participate on the side of our organization that brings investment opportunities to folks, then great. If not, that's fine too. The worst, look at what I started doing is I started asking myself a number of years ago, what's the worst thing that could happen? What do I have to lose? Well, the only thing you have to lose here is sending an email, a little bit of time from reading an article if you choose. But basically, you expand your knowledge, expand your network. That's a good thing. There's no obligation to buy anything. So here's how you can do it. Send an email to newsletter@code3assets.com. You can send an email to investorrelations@code3assets.com if you have some questions or wonder where we're going with all of this. Or if you're curious and you want to speak with somebody on the team, or you want to speak with me specifically, you can just schedule a call by scanning the QR code at the bottom, bring up a calendar link, schedule a call. Be happy to tell you what we're doing, some of the opportunities we're rolling out right now. We do have some end of year investment opportunities that may be tax advantaged, but you don't have to participate in those. Maybe you're just curious about the social mission. Maybe you're curious about any number of things. So certainly feel free to reach out. Appreciate you watching the video, and we'll see you next time.